Let's begin by first defining these concepts. The concept of social capital investing. What exactly are we talking about?
Good evening. It involves a social return as well as a financial return. We're trying to build up an endowment for our NGOs. NGOs obviously have difficulty with funding their activities. They can't charge for their services. If we're successful, and I think we have been, there'll be an endowment from which they can get a regular income. And that's social capital as opposed to private capital, obviously.
And has it worked as a concept? Now, the NGOs that you talk about, so when they generate this profit out of this investment, what do they use the profit for?
They use it to fund their activities. There are 19 shareholders. They're all NGOs. They're broadly speaking developmental organizations operating in poor black communities throughout South Africa in about 200 different communities, locations. And they do the sort of work that the private sector can't do, because servicing poor people, they can't afford to pay for the services. And they tend to do it very productively with very slender resources. So this is there's very positive social outcomes from their work. It's just difficult for them to fund their activities, and that's where Ditikeni has been useful for them. They're starting to build up an endowment which they can draw income from.
Yeah. Now, a return of 36% over a decade is not a return that can be sniffed at, and I'm sure it would be difficult to find companies or indeed investment managers in the private space who have been able to get those kind of returns. But measure for us, just in terms of the original concept and the original goals of this investment, how successful has it been?
Well, I think that's the financial measure, which is very important for Ditikeni. We ourselves are not a non-profit organisation. We aim to make a capital gain. It's our shareholders who are all non-profit, and they get all the benefits. They put in the initial working capital. They put in about 2.8 million 10 years ago, and the company's worth 32 million on the balance sheet. That's tangible net asset value. So that's the 36% per annum compounded. Now, you can't see into the future, but for us, BE investing has been very profitable and successful. And the point is, it hasn't been used for personal enrichment. It's been used to build up an endowment for NGOs who will apply the money in poor communities for developmental purposes.
Yeah. What would you say have been the key drivers of this success? I mean, we often hear about how if you use like the green technologies, you know, the kind of things that are socially acceptable, you actually sometimes end up making more money than the usual traditional means of making money.
Our story is really about the advantages of BE investing. The major one has been access to favorable forms of finance, in short, leverage. We have, in many of our transactions, had significant sums of funding. In some cases, 100% of the investment has been funded. In other cases, 95%. So with leverage, you can do quite a lot if you choose the right assets and time it right and get the right entry price right. So of all the several factors involved with BE, I think leverage has been the critical one for Ditikeni.
Yeah. Timing and price, as they say, are the key to successful investing. But let's talk about now plans that you have for the future. You plan to raise between 25 and 100 million rand. Where are you looking to raise this money first? And secondly, what do you want to use it for?
Well, we've got 21 BE investments in our portfolio, but we are seeing a lot more. Some people feel that BE is sort of dying away, and that's not our experience at all. We're seeing a lot of very interesting transactions. Some of them are coming out of our existing investment pool. Others are small to medium-sized companies that haven't done BE yet. So we need some investment capital. In every one of those deals, some cash is required. You can't get leverage quite as easily as you could. In fact, finance is actually very difficult now. So we have to have some capital. We try to raise 100 million rands for the purpose of making more BE deals. And we certainly have an interesting deal flow pipeline, if you like, on which to spend it. You asked where we're aiming to get the money from. I think there's several pools that we're looking at. foundations which have resources are increasingly interested in putting part of their assets into social capital investing. So we're talking to several foundations, both local and international, who have philanthropic objectives and would like to get a social return, of course, because that's their objective, but also financial return, which is more sustainable. We're talking to some asset managers, we're talking to some retirement funds. We think some companies who are major CSI contributors might find our preference shares a more attractive route for applying their money.
Yeah. Has it been difficult to raise the money?
It's very difficult to raise money in the best of circumstances, and of course we, if you like, handicap ourselves because we're not fund managers. We're a BE organisation that aims to benefit our shareholders. So we're offering something which is, it's a hard sell. We want to share our returns with the investor, but obviously there's a price to that. This is not an unrestricted mandate. The investor will get a commercial return. Ditikeni will get a part of the profits. That's the proposed deal. But raising capital is never easy.